Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Friday, January 2nd, London Open Prep. The dollar is starting 2026 on the back foot as investors lean into further U.S. rate cuts. Precious metals are ripping higher, and oil is steady with geopolitics in the background and an OPEC Plus meeting on deck. Across Asia, trading was thin, with Japan and mainland China still closed, but South Korea's Kospi set a record high, and Singapore reported a strong fourth quarter. With growth driven by manufacturing, the broader macro tone is dollar soft. The U.S. dollar index slipped toward the high 90s on worries about Federal Reserve independence and renewed bets on cuts. And that's filtering through major pairs. The euro edged above 1.1750, helped by expectations that Europe may stay relatively tighter than the Fed, while sterling holds firm above 1.3450 as markets price a gradual Bank of England path. The Swiss franc is stronger, with USD CHF near recent lows. The New Zealand dollar rebounded after a losing streak, and the yen remains soft as the Bank of Japan's cautious approach keeps USD JPY elevated. Meanwhile, in Australia, the manufacturing survey held an expansion at 51.6 in December, with hiring accelerating and costs firming, and traders are talking up the chance of further Reserve Bank tightening. In South Korea, officials flagged risks from excessive won weakness even as factory activity returned to growth. And on the trade front, the U.S. Commerce Department sharply reduced proposed anti-dumping duties on Italian pasta, easing a point of tension for European exporters, though some tariffs still apply and a final decision is due by March. Commodities are setting the tone. Gold climbed toward the mid-4,000s after its biggest yearly gain since the late 1970s, and silver vaulted toward the low 70s, supported by rate cut hopes and some safe haven demand. Oil opened 2026 a touch higher after a tough 2025, with West Texas Intermediate steady near the high 50s, and traders waiting for the OPEC Plus meeting. Geopolitical risk remains a support. Turning to markets and sectors, a softer dollar typically aids risk sentiment and supports non-U.S. currencies and commodities. That's evident in the bid under the euro, sterling, the Aussie, and the loonie, and in broad strength across gold and silver. The yen is the outlier, still under pressure as the policy gap with the Fed and others persists. Looking ahead, the immediate calendar is relatively quiet, with Germany's manufacturing survey on the radar later today. Many desks fully return next week, while OPEC Plus headlines and upcoming U.S. data this month will shape the rate path narrative. A Federal Reserve speech is slated for the weekend. I'll be watching the euro against the U.S. dollar for an uptrend continuation if the policy divergence story holds. Sterling versus the dollar as well, leaning higher on Fed cut expectations. The Aussie against the dollar for follow-through if domestic data and rate chatter stay firm. Dollar Canada for a downtrend if oil remains supported. Dollar franc lower on the soft dollar tone, and dollar yen higher if the Bank of Japan's caution keeps the yen subdued. And in commodities, gold and silver for momentum, while oil likely trades ranges into any OPEC Plus cues. Bottom line, markets are starting the year with a weaker dollar, stronger metals, and selective pockets of growth. But the next leg depends on policy signals and how long the calm in oil lasts. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.